let's get into Queen's Court. I've been waiting for this because, I still have, you know, itchy fingers where I still want to click the buttons. Even though I'm on vacation mode, I still feel like I want to click a button, just one, right? So if I've got to click one,
It's a powerful emotion. There's no doubt.
if I've got to click one, but I've already kind of told myself that I'm on vacation mode and I've gone fishing, where would I be looking to do something, right? So it's kind of funny that yesterday's webinar on portfolio design, which also was the topic on the Trading Justice podcast. So make sure you also grab that link and listen to the Trading Justice podcast. It was episode 456. And you guys know how you have the you always see these numbers, like, when you look at the clock, it's a certain time, like, whatever. 456 is the number that I see all the time. Whenever I look up at the clock, it's 456. So anything I'm looking at, it's 456. Yeah. So it's kind of funny that, the podcast was on episode 456. And when I did my mentorship with Tim 7 years ago now, almost, good Lord, that was a long time ago. This is one of the areas that we focused on, was designing that portfolio, because I was all over the place. And one of the things that, he was adamant about was, yes, it's good to have directional trades, but you've got to have some cash flow trades, and you've got to have something in the area of the market that is neutral. So obviously the Russel was where we started, right? And that's been my love of the Russel ever since, I did my mentorship with Tim. So here we are. Let's think about, put everything into perspective. It is now December 21st. Last Friday was Expiration Friday. So as Condor traders, and those of you guys who are, team CFC Cash Flow Condors, which is a wonderful system designed by Coach Tyler, we do this every single month. So we know that we allocate a certain amount of capital to our portfolio for the Cash Flow Condors. So if I've got 5 or 6 or 7,000, whatever the amount is allocated, I'm not throwing all that money into one month. I kind of spread it out because we have these systems kind of, staggering, right? So the capital that I had tied up for December has now been released, which means now what can I do? I can start looking at that February Condor, right? And start to build it. So I'm looking at it and I'm going, all right, what am I going to, how am I going to play this out? We just, found support at 2100. We talked about that being a significant number, right? That's a key level of support. Tested it yesterday, bounced right off of that yesterday. So it's a two-part question. Number one, typically we do this on the monthly. We do these on the monthly expiration. So right now I'm looking at the February 18th expiration. The February 18th expiration doesn't give me the delta that I typically would like to trade, because after you get to 1900, it starts becoming 50 wide as opposed to 10 wide. Yeah. All right. So the last one that I could possibly do a 10 wide on is the 1910, 1900. That's giving me a 15 delta. So I'm being a little bit, out of my realm of where I normally sell my deltas, which is, typically a 10 delta 10, or lower. Yeah. Right. But I can't do that because after I go 18, I'm 50 wide, and I don't want to do that. So I'm looking at that as either getting in at the selling the 1910, buying the 1900, or I can go out and do a weekly instead, which will give me the ability to do that. So if I look at the 69-day, now I can go out and give myself a little bit more space and get that 10 delta that I'm looking for somewhere in that realm. So now I can sell the 1830 and buy the 1820, and that puts me right around that 10 delta that I'm looking for. So that's first question. Now that I know support has kind of formed, well, it tested yesterday, and now support is holding at 2100. Can I be a little bit more aggressive and sell a 14 delta as opposed to what we traditionally sell, which is at 10 delta? Or do I stick with my rules, stick with my plans, do a weekly instead and sell that 1830 and give myself a little bit more cushion, take less cash flow, just in case the volatility isn't done yet, right? Because it ain't over until the fat lady sings. So I don't know whether the fat lady is done singing yet, right?
So basically you're trying to decide if it's appropriate to sell either right here on a monthly option, which you would typically do, but because of the spread difference underneath 1900. It's just you don't want to do a 50-point spread. It goes against your rules. You don't want to put that much capital per contract. All of that jazz, right?
Mm-hmm.
Or two, switch it out to a weekly, which would be technically a little bit more time, right?
Mm-hmm.
But that allows you to get down a little bit deeper, right?
Yes.
A little bit deeper. That's a fantastic question, honestly. And I first want to start with, is this the time to be riding a bull put spread on the Russell 2000? Okay.
Mm-hmm.
And whenever I have that question, I always go back to something Tyler Craig, who is the author of this system, the creator of Cash Flow Condors, something he said in a newsletter, not in a newsletter, he said it in Tales of a Technician, I believe in, what was it? Was it December of 16?
Mm-hmm.
I want to
It had to be
say
December of it was December of 16 because that was the
December
election
of
year.
16? Yeah, it was, and it was after Trump was elected president,
I
and
remember.
the market went up like, I want to say 15% in the Russell 2000, and just
crazy.
smacked every upper end bear call spread, like every single bear call spread. I don't care how deep you threw it out there, it was hit, right?
Yeah. Mm-hmm.
And I still remember Tyler writing a newsletter, and it was, what did I learn from basically Trump's 15% market following the election? And literally he said nothing. I learned I'm going to write it again, because it's Cash Flow Condors. I mean, it's a probability edge over time, right? 80, 85, 90%, depending on the delta you're selling and how you manage it. But it's something over time. And I feel like right now, because of the volatility, this could give a lot of traders a lot of uneasiness regarding writing any call spread, any put spread at any level, right? At any level. And so I think it's an appropriate question, but I'm going to say the same thing that Tyler said 5 years ago. I mean, yeah, I get it, guys. The market has some volatility in it, but that's why you get to sell down at 1830 and still get a decent credit. But also, this isn't the first time we've had a lot of heat coming into 2100 this year. We've had a lot of heat, a lot of times coming into 2100. And I was hearing the halftime report literally for every single one of them. And for every single one of them, I said the same thing. 2100's rock solid support. And until that level is and it could be this week. It literally could be this week. But that's why you're not selling a 2050 strike price.
Right.
But the simple reality is it could support can fail, and at any point, the same way markets could go up at any point. I do feel like you got to rely on that 2100 level of support, because we've been relying on it all year long, and we've been riding a lot of bull put spreads underneath that level all year long. And so I don't think, simply because the news is a little bit more inconsistent and the price action is a little bit more inconsistent and the volatility is a little bit heightened, that's going to bring you off your system. Your system's been very, very successful. Continue with the system. It's what got you here to a certain extent. You know what I mean?
Yeah.
So I certainly do feel like this is the appropriate time, because if there's a better time to write a bull put spread than when the market's at support, I don't know when it is. Like that's the timing of it, is at support. Sell the bull put, because what that allows you to do is maximize your range, is what it allows you to do. And so if you're waiting for, if you're the individual writing a bull put spread and you're saying, well, I need to see price appreciation first. Well, the more you need to see, the less probable your trade is of being successful. And I know it's weird to think about, right?
Yep.
And so you need to see it go upward moving in price. You need to say, I need to get above 2,300. Well, that's fine, but then you're selling 2050 and you're going to get stopped out in any volatility. And, that's concerning. So I do think this is the appropriate time, number one. Number two, I do think because of the volatility, you should try to maximize your range, though. I do think maximizing range here is very, very important. And because of the limitations that the monthly strike prices currently have, that
Mm-hmm.
can change, by the way.
Right.
But
It
because
will.
of
Mm-hmm.
the current limitations of it, and if you don't want to go out and do a 50-point spread, which you can, but if you don't want to do a 50-point spread there, then you certainly could come out to a little bit more time. We're going 69 days here. That allows us to go all the way down to the 1800 level. So instead of M, when you're looking at the strike prices you had to do, you had to
Would
go
have been
1900 here,
1900.
right?
Mm-hmm.
And 1900 wasn't the one you sold. You had to go 1910,
1910. Yeah.
right? You had to go 1910 versus 1900. By going out just a little bit more time, you're going to be able to go a little bit deeper here. We're going all the way down to 1800 here. Now we're going to do a 20-point spread here,
Mm-hmm.
M,
Mm-hmm.
instead of the 50-point spread, but we can do an 1800 by 1820 spread there. Or if you don't want to do the 20-point spread and still want to stay structured with your 10-point spread, we can go
Into the
1830 by
1830.
1840 here. Now, on this far out of the money, you're not going to get a lot of activity, especially right now.
Right.
But you still have fairly decent bid-ask spreads without the liquidity there. So what my recommendation to my queen would be is 2100 is the level you want to start thinking about riding that bull put spread. And it's not just 2100, it's at support, right? That's
Mm-hmm.
where you're looking to write credit spreads. Is you want to use your technical edge. You still want to use your technical edge, even though you're selling something with massive range here. And instead of going to the monthly, wait a week, see if they get different strike prices. But
Right.
if you were looking to get that itchy trigger finger because you just got back from a vacation, then I would most likely recommend going out a little bit more time, because again, we're talking about deep out of the money options here. Okay.
Yes.
The theta curve on deep out of the money options is slightly different. Whereas you're dealing with the standard theta curve where it does that on the last 30 days. Well, when you're looking at deep out of the money options, the theta curve on 60 days kind of has some nasty drop in the 60-day time frame as well. And so this is an appropriate time where you can take advantage of theta and from a technical perspective, maximize your range. My recommendation to my queen would be to use the weekly, go out a little bit more time, drop that range. Remember, we're doing with volatility right now. We want to maximize range in volatility. We want to
Right.
maximize that range. I feel like 1900, if 2100 clips,
Of course. Yeah. We know the next floor.
like yeah, it's down around 18. So I'd want to get down a little bit deeper here. Now support could form anywhere. 2000 certainly could be a support level. It is a
Mm-hmm.
significant whole number. You do have daily support levels you can track, but the major ones are down around 18. And so I do like selling a little bit deeper out of the money here, Em, even if it does break a little bit of rule by going out a little bit more time than you're comfortable with.
Mm-hmm.
Maximizing range in this heightened sense of volatility is important.
And then here's the other part. Do I also throw on the bear call spread?
No, because
I want my extra cash flow, Matt.
I know you do. You got Christmas presents. I get it. I totally understand it. But the simple reality is you're dealing with a lot of volatility right now. And, we can go out all the way deep. We can go deep out of the money, go to 10 Delta 2480 contract. That puts you right up above the resistance level here.
Mm-hmm.
I don't like it yet. I like a leg in approach here because we're building at support. If support fails, you immediately lob that bear call. Immediately lob that bear call, right? Yep. But I like it a little bit better, Em, because I do think we're going to get a little bit of a support build here. So I do like it a little bit better once the Russell gets back up into the chop.